Eric Mwadhe, Mwadhe.com, with world market analysis for the weekend of July 9th and July 10th, 2015. Let's take a look at markets here, see how Asia closed, and we can see pretty much down session in Asia across the globe. But this was reversed if you take a look at European markets at the close of Friday's session. We saw a strong close on Friday. For example, the German market was up more than 2%. If we take a look at the Americas with about half a trading session on Friday to go, we can see that markets in the Americas are called up. For example, the Brazilian market is up about 2%, Canadian market up about 1.24%, and take a look at the US market with about 3 hours before the close on Friday. We are seeing a nice gain, let's call it about more than 1% gain before the close here with 3 hours to go. Let's take a look at world market charts. And we begin with the Australian market here, and we can see that what we're going to see in this weekend's market analysis videos is, in my opinion, markets are still struggling to hold the top side of the weekly RSI. So even with a breakout, or at least let me put it this way, even with the market moving higher, we still have to break out above the resistance line here on the weekly, and also we have to break out above the recent weekly closing high. So one wonders whether this market at the very best is sideways for now. In fact, you can take a look at the daily for the Australian market for this illustration. Right now we closed the week trading below or between the 50-day moving average and the 200-day moving average. So looks like net we are still contending in this sideways market until we can either move above that, so with a move above the 50-day moving average, or a move below would suggest whether we are set for a move lower. So right now, in my opinion, it looks like sideways action, and you can see that even with a push higher on a day-to-day basis, the RSI will still have to move above this topside resistance. So in my opinion, really a lot of work needs to be done by these markets to move higher. Lots of resistance levels on the daily and also on the weekly chart. If we take a look at Japan, we can see that as long as it is holding above the recent weekly closing lows here on a weekly basis, as long as it is above this line, we can say that it is stabilizing. Keep in mind, it made lower lows recently on the weekly in price, but the RSI did show an improvement, and that could set the stage for a rebound, as we've seen. Also take a look here that we have another wedge on the top side. So we have bottom side support and we have top side resistance. So it looks like until we can either break out or break down above or below the wedge, looks like this is another market showing that at best we are stuck in a sideways market until we can get out of this range. On the daily, as long as the market is holding above this recent daily closing lows, the market should be okay. And the levels to watch here is 14,952.61 and again 14,952.02. So those are the daily closing lows here. As long as the market is holding above this price range, one has to assume that the market is stabilizing. Now, of course, if we take a look at the monthly, we can see here that the monthly chart continues being very bearish, having moved below 2016's prior monthly closing low. So the monthly chart here is on the scary side. You can see that the RSI is trading at 3-year lows, and that continues to be a risk for lower prices. And also we can see here that the MACDs are both trading at 3-year lows. So the risk continues that it could very easily decide to break the recent daily and weekly closing lows. And for example, should we trade below the recent daily closing lows, given the makeup of the monthly charts, one can expect a much lower price range for this market. But holding above the recent daily closing highs does give a little bit of hope that the market here is stabilizing. Again, a breakthrough here to recent daily closing lows more importantly a break below the recent daily closing low of 1952.02. Anything below that, which is this daily closing low here, anything below that could actually bring in much lower prices. Let's take a look at the Indian market by way of the Nifty, and we can see here we did continue or close the week above the recent weekly closing high, and so above the recent weekly closing high of 822.0.80, anything above that, and you can give the market the benefit of the doubt. The only problem we've been noting is if you go back and take a look at the previous break on the RSI coming off the highs of 2015, so this break in the RSI right there brought the market off the highs, and so we've been expecting a pullback if the market ever comes back and shows resistance on this red line. So right now this is still developing into a problem. Again, another weekly chart worldwide showing that markets could stall if the market continues showing resistance. Of course, market bulls would like to see the market move above this RSI range and record higher prices. Otherwise, resistance on this red line, as we can already see signs of resistance here, would suggest that the next meaningful swing trade is going to be lower. If you take a look at the daily, one can see here a good argument for a market here to stall based on the fact that the market did make an improvement in price highs recently, but the RSI did not follow through. So that negative divergence could set the stage for a pullback as far as the Nifty is concerned. And if you take a look also at the hourly chart, and on my hourly chart I'm using RSI setting of 26, but on my hourly chart here what we see is again negative divergence as the market made higher highs in price here, but this was not confirmed with RSI moving higher. So that negative divergence could set the stage again for another pullback. So given the weekly, daily and hourly, one can still lean to a market here that shows lots of signs of pulling back after a nice recovery of the recent week-to-week lows. Take a look at the South African market on the weekly chart, and again here we see another weekly chart showing RSI topside resistance. So until the market can move above this line on the weekly time frame, continued confirmation on this line suggests that the market eventually does move lower. Otherwise, if the market is to see higher prices, then the first order of business is to clear that resistance line. Otherwise, for now, we ended the week with resistance, so we can conclude that net, given where the market closed for the week, we are still expecting week to week the market to pull back. Take a look at the FTSE, which I'm going to use here to represent my analysis also for the French market, the CAC 40 and also the DAX. So this is an analysis that can be extended to these two other markets because they are kind of similar in terms of how the charts do set up right now. So on the daily for the FTSE, you can see a recent move above the recent daily closing high, and so we can say that as long as it is holding above that recent daily closing high, and the level to watch there is 6577.83. So again, that's the recent daily closing high. Anything above that, and we can still continue expecting the market to continue recovering well after recent lows here. So anything above this price range is bullish. Now that's the bullish argument. So if it can hold above that, that's good. At the same time, if we see a reversal that brings the market back below 6577.83, any movement back below that would suggest that the market is now due for a pullback after a nice recovery of the lows here about 2 weeks ago. Now that's the bullish argument, that if it stays above 6577, the market is good. Let me show you some of the problem here with the chart to be consistent with other charts across the globe, and you can see here an improvement in price while the RSI did not show any improvement. So that's not good, because that does set the stage for what we've been calling negative divergence, suggesting that a pullback here might make sense, and also coming back and showing resistance where the RSI had failed. So recent failure in the RSI right there, that failure led to the market pulling back. In fact, huge drop, and now we are coming back after many weeks and still showing resistance on this red line. So until the market moves above this red line and until the market can clear that negative divergence line, until the market can clear these two lines, we can continue expecting a pullback day to day and week to week. Also, take a look at the hourly for the FTSE, and we've seen this in other markets where we have an improvement in price, or at least an attempt to close higher hour to hour, but this attempt has come with declining RSI strength, and again that negative divergence sets the stage for a market to pull back. If we take a look at the Canadian market right here, holding above the recent 2016 weekly closing high is good, and that is bullish. So as long as the market can stay above 14,226.78, this is good action. So market bulls want to demand that the market stays above that, and of course we know that in the coming week and weeks, should we drift back below that price, that would be bearish. And as we've noted in other markets, a quick look at the hourly presents a little bit of a problem here and a challenge, because you can see again here that markets are making an attack to fresh highs, short-term highs, but this is coming with declining RSI strength. You can also see that that line actually does extend off the highs recently here. So there's resistance around this level. The market needs to move above this, or we can expect a pullback also coming off the recent pullback, and I'll show you. So this recent RSI movement here, this break brought the market off the highs here of early June. So we draw a line from there, and you can see that we are coming back to test that red line also. So we need to be above those two lines, otherwise again here's another wild market showing that on the hourly that there's a challenge here, and that more than likely we might still here be expecting a market to drift lower as long as we see resistance around this level. Let's take a look at the Brazilian market. Week to week, it is above the recent weekly closing high, just as we saw for the Canadian market, and so that's good. The market needs to defend that, and the level to watch here is anything above 29.29, which happens to be this weekly closing high. The market needs to be above that range if it is to see higher prices. It is above that range right now, so we can give the market the benefit of the doubt. Anything above this is bullish. Anything back below that price range will suggest a failed breakout and is bearish. Now, that's the 2-year weekly. Take a look at the 5-year weekly, and you can see problems here creeping, because as we discussed in the prior videos here, this break in the RSI here brought the market off the highs of 2014. So we draw a line from there, and you can see that right now this is what the market is doing its best to decide. Resistance on the red line would suggest to expect the next swing trade to be lower, while staying above the red line is bullish. So we can see that yes, prices are above the recent weekly closing high, but the RSI is back to a level where we can expect a little bit of a problem here. If you take a look at the top side RSI line on a weekly chart, you'll see that it is coming back, and right now we are seeing that it is showing resistance, or at least connecting with that line there. So the red and the blue line do form some type of resistance on the weekly. We've seen this in other markets where the weekly charts are showing a lot of possibility for resistance. So net, as long as we are seeing that the hourly, so here we take a look at the hourly for the EWZ, the ETF that tracks the Brazilian market, we can see again here we are making an attempt to move higher. So there's an attempt to take out these highs, but this is coming at the expense of declining RSI strength. So that negative divergence, given where the weekly charts are also trading with RSI resistance or potential for the RSI resistance, one has to assume that most of these world markets have a lot of work to do, because they're coming back to challenge some of their resistance levels on the weekly, like the uniform activity area or the top side resistance. So net, I conclude this video by probably speculating that markets right now, after a nice recovery, are pointing lower until we can clear the current resistance levels on some of the charts. Eric Mwathe, Mwathe.com. As always, good luck, peace, and blessings. ESC.